Hello everyone, my name is Milian Benola Ben Saber, and today me and my team are going to present you the CBD markets. First of all, CBD is an acronym meaning cannabidiol, with different psychological and physical effects, but does not produce a psychoactive effect. Its benefits range from helping consumers with chronic pain, sleep issues, etc. Some companies enter the marijuana market as Canopy and Aurora for both recreational and medical purposes, which became extremely profitable for investors. To better understand the segment of the CBD industry and its competition, we decided to set the Canada area at the geographic location. On the 17th of October 2018, Canada has legalized medical marijuana at the federal level. One part of the things to follow to sell marijuana in Canada is that companies grow their cannabis, manufacture their extracts, and manage sales themselves, so they have to be vertically integrated. CBD market is a special market as it is run by a set of few firms which are price setters. A good example of dominant firms in the geographical region are Canopy Growth and Aurora Cannabis. On our graph, we can see that they have the majority of the profit in this market. We can clearly see that the market is an oligopoly. Only a few firms control most of the markets. Indeed, the first three companies make over 2 million in revenue as quarter sales, which is much more than the other average companies.
Now we can speak about the barriers of entry which are important in this market. A license is needed in order to be allowed to legally sell cannabis in Canada. Multiple inspections are held during a period of 12 to 18 months, and there are a lot of series of tests to pass to be able to finally sell to consumers. Thus, the fees engendered to be able to get the license can be very high, so investment is needed to get into this market. Moreover, it is necessary to strictly follow the legal way of cultivating cannabis, and making a mistake can end in the loss of the license. All of these measures allow the government to control the market and the selling of CBD, but makes the prices higher and the barriers of entry important. Looking at the two tables, we can see that the government controls everything, from the square foot of cultivation to the inventory of licensed suppliers, and a lot more. A high number of businesses tried to enter this market and were rejected. Some still have pending application, and a very small part of those will get their licenses. The marijuana production licenses by type graph shows that to us. Thus, the important federal regulation imposed on the companies allow the government to have high control over multiple key aspects: the number and size of cultivation operations, the limitation of the number of retail outlets, and the geographical location of firms. The high control leads to high barriers of entries, then it allows less competitors' entry and exits from the markets, and leads to lower competitive conflict, pricing power for big firms, and high profit margins.
Now we're going to talk about market size and estimated growth of this market. As you can see in this graph by Deloitte, in light green, we can see the current size of the market, which is already huge. And in dark green, we're seeing that it's expected to grow even bigger. In these graphs, we can see the main marijuana license producers. As you can see in these graphs, there's not a lot of marijuana license producers. As Maxime mentioned before, the licenses are really hard to get, and the government controls this very much. This graph from Statista shows us the estimated total market size of medical marijuana in Canada from 2014 to 2025. As you can see, it has been growing in the last few years, both in supply and demand, and is expected to stabilize at around 3 billion Canadian dollars in the next coming years. As far as the legal and illegal market for cannabis and its derivatives, we have a couple things to say. In the 20th century, marijuana was criminalized, and with this, an illegal market appeared. There was demand for the product, but there was not a single supplier. Illegal suppliers started appearing. Now, we would think that because of the decriminalization and legalization of marijuana in Canada, the illegal market would disappear. But this is not the case. This is due for two reasons. The first reason is that in the illegal market, there are a lot of consumers that have developed relationships with dead suppliers. And changing from an illegal supplier they already know to a legal supplier they don't know and don't trust gives the consumer high switching costs, apart from a rise in price from switching to the illegal market to a legal market. The second reason is the shortage in supply. The demand for marijuana is growing, but the suppliers get legal barriers from the government, so there are not a lot of suppliers, as you can see on the previous graphs. These two graphs shows us that there are not a lot of suppliers because a lot of licenses don't get approved. As you can see, there are a lot of licenses pending, and this other graph shows us the increase in price that would happen if users switch from the illegal to the legal market.
Demand for CBD comes from two places, from marijuana production and from legal industrial hemp production. But As Canada legalized recreational marijuana in 2018, the focus for CBD is understandably shifting to a marijuana context rather than hemp plants. Due to the legalization of marijuana, the demand has increased a lot and people have expressed frustration with the shortage of CBD. Governments are still limiting the production of CBD and supply is closely behind its demand. In this graph, you can see visually the estimated legal production of Canadian marijuana in orange and the estimated demand of Canadian marijuana in blue. Only 7.28% of the whole demand is being legally produced. In these two graphs, we can see the change of demand and supply after the legalization of CBD in Canada. We can see that the demand has shifted to the right and the supply is still the same due to the government limitations on production. Therefore, we see that there is an excess of demand and that the price have increased.
Now that you know the technicalities of the market and how the demand and supply of this market work, we're going to tell you how the long-term demand and supply will work. In the long term, a pattern that happened in 2010 will repeat itself. Why? In 2010, there was a lot of regulatory leniency starting to happen in Canada. So a lot of suppliers could get into the market. When I mean a lot, I don't mean as much to satisfy the demand, but enough so the prices decreased. Now that the demand went up again because of more regulatory leniency and because stigmas around cannabis have decreased, this pattern will repeat itself. More suppliers will enter the market in the long term, thus reducing the price of cannabis.
Moving on, I will now talk about the cost of the CBD market. The first graph shows the cost for the short term, and the second graph shows the cost for the long term. In the short term, we can see that mainly costs come from capital and infrastructure, labor for cultivation, and materials for cultivation, while in the long term, 80% or more of the costs come from labor for cultivation and material for cultivation. Capital and infrastructure costs in the short term are very high compared to in the long term, especially in the indoor planting. That is because in the long term, fixed costs are equal to zero, and firms can decide if they want to live or stay in the market. But overall, CBD market costs come from labor for cultivation and materials for cultivation. CBD has two main substitutes, alcohol and tobacco. And in the first graph, we can see the percentage of people who use it more, use it less, or has replaced it after the legalization of CBD. And in the second graph, we can see that alcohol can also be a complement of CBD, as some people, in some cases, use it together.
So when it comes to product differentiation within the CBD industry, there's a lot of variation, and we can classify CBD as a heterogeneous product. This is because we find the product sold in many different forms, and there are different product types. So we separate CBD products mainly into two groups, hemp-based CBD and marijuana-based CBD. So derived from these two main groups of CBD, we find, as mentioned, many different types they're sold in. So the main types are CBD oils, CBD pills, CBD creams, CBD edibles, and CBD isolates. So as you can see in the pie chart below, they're all very popular, and none of them hold a significant market-leading share. None of them holds at least a 25% market share. So there's a lot of competition happening between these product types as well.
So, from a social point of view, we have identified that in terms of innovation, there's still much uncertainty about CBD and its effects. So the current degree of innovation is centered around discovering new health benefits that the CBD products may provide. As of now, the main selling points of CBD are for medical use, and they're for the treatment of health conditions, such as decreased inflammation, anxiety, nerve pain, depression, and all those conditions we can see in this graph. However, the exact therapeutic dose needed to improve said conditions is still unknown for most of them. Therefore, consumers are still unsure on the negative side effects CBD can cause. On the other hand, another big area of innovation in the CBD market is precision in this dosage technology, meaning that the aforementioned problem may not be a long-lasting one, and companies will be able to offer consumers a long-lasting period of positive effects with a reduced worry of said side effects. And the other social point of view is from the recreational sector, who consume CBD products just to relax without caring so much about the side effects CBD products can produce and the right dosage needed.
So when it comes to business strategies for CBD marketing, we can see on the short-term level that currently there are a lot of limited ad opportunities. This is because there are many bans and restrictions being held upon these CBD companies and guidelines they have to follow. So currently, the major platforms for advertisers, such as Google, Facebook, Twitter, and Instagram, are not allowing CBD products to be advertised. However, Google and Facebook have held talks, and they are prospected to open up to CBD companies on their platforms for them to advertise. So this will only be for hemp-based CBD products.
On the other side, in the medium-long run, these companies have to focus more on research and innovation, and that's mainly due to the fact that it's a relatively recent market that evolves daily. So we know that the non-medical use of cannabis was legalized in 2018, and so as to show evidence on the health and safety-related effects, the Canadian government has invested in research, as well as supported public awareness campaigns in order to promote guidelines for lower risk use. thing which will definitely help CBD companies to reassure its customers as well as to appeal to a larger part of the population.